As the first light of dawn breaks over the bustling ports of Shanghai on this crisp January morning in 2026, the world awakens to a transformed reality in the shadowy realm of global commodities, where the unassuming metal known as silver has suddenly become the linchpin of an international power play. Imagine the vast cargo ships idling at the docks, their holds once brimming with gleaming bars of refined silver destined for factories across Europe and America. Now, standing silent under the watchful eyes of government inspectors enforcing a new era of control, this is no mere bureaucratic shuffle. It's the opening salvo in what experts are calling China's silver siege, a calculated maneuver that has sent shockwaves through financial markets and industrial boardrooms alike, threatening to ignite a price cataclysm that could reshape economies in the first quarter of this year alone, while Wall Street traders sip their morning coffee, oblivious to the full ramifications. Beijing's quiet announcement just days ago has effectively redrawn the map of global silver supply, turning what was once a freely traded resource into a tightly guarded strategic asset. And as the electronic futures markets flicker back to life after the holiday lull, the pressure is building to levels that could make the oil shocks of the 1970s look like a minor blip. In this comprehensive investigation, we delve deep into the mechanics of this siege, uncovering the secret hoarding strategies that have been brewing for years, the geopolitical chess game at play, and the inevitable explosion in silver prices that could see them soaring beyond triple digits before spring arrives, leaving investors scrambling and industries reeling in its wake. To grasp the magnitude of this unfolding crisis, we must first journey back to the roots of silver's dual identity, a metal that has danced between the worlds of ancient treasure and modern necessity for millennia. Its lustrous surface hiding a story of scarcity and ambition that now converges on the world's second-largest economy. Silver isn't just the stuff of pirate lore or family heirlooms. It's the invisible backbone of our technological age, woven into the solar panels that harness the sun's energy, the electric vehicles that promise a greener future, and the semiconductors powering the artificial intelligence revolution sweeping across continents. China, with its insatiable appetite for progress, has positioned itself as the undisputed kingpin in these sectors, consuming over half of the world's annual silver output to fuel its dominance in photovoltaics and electric mobility, where each solar module devours grams of the metal for conductivity, and each EV battery demands even more to optimize performance. But this consumption isn't haphazard. It's part of a meticulously orchestrated plan. One that began escalating in the early 2020s, when Beijing's policymakers recognized silver's vulnerability as a choke point in the global supply chain, prompting a shift from mere importer to strategic hoarder. By 2025, China's silver imports had surged to record levels, drawing in ores and concentrates from mines in Peru, Mexico, and Australia, only to refine them domestically and stockpile the finished product, creating vast reserves that dwarf those of Western vaults. This hoarding wasn't announced with fanfare. It unfolded in the shadows of state-owned enterprises and secretive warehouses, where billions of ounces accumulated, insulated from the prying eyes of international traders, as global demand for green technologies skyrocketed. Driven by net zero pledges from governments worldwide, China's reserves grew, not just as a hedge against inflation or currency devaluation, but as a weapon in the escalating trade wars, ready to be deployed when the moment was right. And that moment arrived on January 1st, 2026. With the implementation of export licensing controls that effectively barricade a significant portion of the world's refined silver behind the Great Wall, a move that has left analysts breathless and markets on the brink of pandemonium. Picture the scene in the dimly lit control rooms of Beijing's Ministry of Commerce, where officials pored over lists of companies, selecting only 44 entities deemed trustworthy enough to export silver under the new regime for 2026 and 2027. A slight increase from previous years, but a far cry from the open floodgates of yesteryear. This isn't a blanket ban, as some sensational headlines might suggest, but something arguably more insidious, a licensing system that reclassifies silver as a strategic material akin to rare earths, subjecting every outbound shipment to rigorous government approval, ensuring that only those aligned with national interests can participate. The implications ripple outward like a seismic wave. For China isn't just any player in the silver game. It refines roughly 60 to 70% of the globally traded refined silver, transforming raw ores into the pure bars and powders that industries crave. With this new barrier in place, what was once a steady stream of 121 million ounces annually exported to the West is now funneled through a narrow state-controlled spout, potentially slashing availability by tens of millions of ounces overnight. Factories in Germany building solar inverters, assembly lines in the United States churning out EV components, and tech hubs in Silicon Valley fabricating AI chips all suddenly face a supply crunch that no amount of diplomacy can immediately resolve. The timing couldn't be more calculated, as the world enters a new year with silver prices already hovering around $74 per ounce, up sharply from the holiday dip. This siege amplifies existing deficits, where global demand outstrips supply by an estimated 200 million ounces based on 2025 figures. A gap projected to widen in 2026 as industrial consumption climbs to 1.3 billion ounces, while mine production stagnates at around 800 million. China's hoarding, masked as domestic prioritization, isn't merely about self-sufficiency, it's a bid for leverage, forcing Western nations to pay a premium for access or accelerate their own mining efforts, which could take a decade to bear fruit amid environmental regulations and geological challenges, as whispers of this policy echoed through trading floors in the final days of 2025. Silver futures jumped 11% in a single session, a harbinger of the volatility to come, where the paper market's illusions of abundance clash violently with the physical reality of scarcity enforced by Beijing's iron grip. Yet, to truly understand the siege's potency, we must peel back the layers of China's long-game strategy, a tapestry woven from economic nationalism, technological ambition, and a keen awareness of global vulnerabilities that positions silver as the new oil in the energy transition. Flash back to the rare earths playbook of the 2010s, when China cornered 90% of that market and wielded export quotas as a diplomatic cudgel, sending prices skyrocketing and compelling foreign manufacturers to relocate operations to Chinese soil. Now, silver follows a similar script, elevated from commodity to critical mineral in Beijing's eyes, essential for achieving carbon neutrality by 2060 through a solar capacity that already eclipses the rest of the world's combined. In 2025 alone, China's photovoltaic installations demanded over 200 million ounces of silver, a figure set to double by 2030 as gigafactories ramp up production, each panel requiring up to 20 grams of the metal for its bus bars and conductive pastes. Electric vehicles add another layer, with projections estimating 50 million ounces annually diverted to automotive wiring and batteries, where silver's superior conductivity outperforms alternatives like copper in high-performance applications. But China's hoarding extends beyond mere consumption. State-backed funds and private entities have amassed physical stockpiles, rumored to exceed 500 million ounces in undisclosed facilities, a buffer against potential Western sanctions or supply disruptions from politically unstable mining regions. This accumulation has been subtle, masked by net import figures that show China as a silver sponge, absorbing $5.57 billion worth of ores in 2024 while exporting refined product worth $3.8 billion. But the balance is tipping as domestic refiners prioritize internal needs. The January FER controls crystallized this shift, limiting exports to approved firms whose output must align with national quotas, effectively locking up 13% of global supply in a market already hemorrhaging from depleted above-ground stocks. Down 80% since the pandemic era, as arbitrage opportunities widen, with Shanghai premiums soaring to $5 over New York spot prices. Planes laden with Western silver once flew eastward. Now, the flow reverses into a trickle, starving international vaults and forcing buyers to bid higher, a dynamic that has already propelled silver to record highs of $79 in late December 2025. The emotional undercurrents of this siege run deep, stirring a cocktail of fear, resentment, and urgency among Western stakeholders who suddenly find themselves on the wrong side of a resource divide, evoking memories of colonial scrambles, but inverted in a multipolar world where the East holds the cards, for the average investor in London or New York. Nursing portfolios battered by volatile stocks and eroding bonds. Silver represented a safe haven, a tangible asset immune to inflation's bite and geopolitical whims, until now, as Beijing's grip tightens. Retail stackers who once snapped up eagles and maples at modest premiums now face dealer shortages, with online bullion sites reporting 300% sales spikes in the holiday week. Premiums ballooning to $20 over spot as mints like the US Mint and Royal Canadian Mint struggle to restock amid holiday closures. The human stories emerge, the solar entrepreneur in California, racing to secure contracts for panels before costs spiral, or the EV manufacturer in Michigan, recalculating budgets as silver's price threatens to add thousands to each vehicle's sticker. This isn't abstract economics, it's a siege that hits Main Street, where rising costs could delay the green transition, inflating electricity bills and slowing job growth in renewable sectors. Yet, there's a darker thrill for the contrarian, the silver bug who sees opportunity in chaos, positioning themselves to ride the wave as institutional money floods in. Pension funds reallocating billions to commodities in the January effect, only to collide with China's wall. The betrayal stings for banks like JP Morgan, long accused of suppressing prices through paper shorts, now potentially flipping to longs as they front-run client orders, scalping profits in the volatility. Emotions peak in the trading pits, where fear of missing out battles the dread of a manipulated crash. But the math is inexorable, with global pension assets at $50 trillion eyeing even a 0.1% shift to silver. That's $50 billion chasing a market valued at $56 billion annually at current prices. A mismatch that demands price rationing through surges to $140 or even $280 per ounce to balance the equation. Zooming out to the macro canvas, China's silver siege doesn't exist in isolation. It's a brushstroke in a larger portrait of monetary upheaval and geopolitical realignment that amplifies its destructive potential, setting the stage for a Q1 2026 cataclysm that could eclipse recent market tremors. As the U.S. grapples with a $36 trillion debt mountain, interest payments devouring over $1 trillion annually, more than defense or Medicare, the February debt ceiling showdown looms like a thundercloud, threatening defaults, downgrades, and a flight to hard assets. Silver, with no counterparty risk, becomes the ultimate insurance, its price surging as bond vigilantes sell treasuries. Yields spike and the Federal Reserve pivots to printing trillions in fresh liquidity to avert banking collapses, devaluing the dollar and igniting inflation's second wave. China's move dovetails perfectly, exacerbating the shortage just as BRICS nations accelerate de-dollarization, eyeing a commodity-backed settlement unit that includes silver, remonetizing the metal and adding a premium far beyond its industrial value. Inflation, sticky at 5% despite Fed claims, erodes real yields, making silver's zero yield a virtue in a world of negative returns on cash. The industrial January effect compounds this, with procurement teams at Samsung and Tesla panic buying off-market at $80 per ounce, bypassing COMEX and draining visible inventories. Political risks in Latin America, home to half the world's mines, add fuel, higher taxes in Mexico, nationalization threats in Peru, curbing output when it's needed most. China's hoarding by removing marginal supply creates a floor under prices at $71. But the ceiling? Analysts whisper $125 by mid-2026, driven by AI data centers gobbling silver for cooling and connectivity, a demand unseen in forecasts. This confluence, debt crisis, monetary debasement, supply cliff, turns the siege into dynamite, where Q1 volatility could see gaps up to $73 at open. Then vertical moves as algorithms chase the RB. Humans panic buy and banks flip scripts. As we approach the climax of this narrative, the siege's full force unleashes in projections that paint a harrowing yet exhilarating picture for Q1 2026, where silver's price trajectory morphs from steady climb to explosive ascent, shattering records and fortunes alike. Target 1, $85 by mid-January. As pension rebalancing collides with export restrictions, volume spikes confirming the breakout from $75 resistance. Target 2, $100 by February's end, fueled by debt ceiling panic and industrial bids. A vacuum zone with no sellers, as miners hoard and dealers go dark. Target 3, $150 by quarter's close. If BRICS announcements remonetize and Fed floods liquidity, a parabolic spike echoing 1980s Hunt Brothers but grounded in fundamentals. But beware the traps. Low volume dips as shorts test resolve, only to be crushed by physical withdrawals. The emotional apex hits when mania grips. Friends who mocked your stacks now begging tips. YouTube pivoting to silver hype. That's the signal to scale out using gold-silver ratios, swapping at 40.1 for caution. 30.1 for partial exits, 15.1 for full preservation into land or gold. Stay physical, unleveraged. This isn't gambling. It's survival in a sieged world. In closing, as the sun sets on this investigation, the silver siege stands as a testament to China's ascent, a cataclysmic force reshaping 2026's dawn with prices poised to erupt, rewarding the prepared while punishing the complacent. You've glimpsed the storm, now act before it's too late. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful untold stories, and leave your thoughts in the comments. I read every one. A new, even stronger documentary is already on the way. So stay curious, and I'll see you again soon, right here on The Scope.